Live streaming is on.
All right, so let's get straight into it. All right, so you can see my screen.
Yes, I can.
All right, so we're gonna start off with the gap. With looking at gaps. So all a gap is GAP. It symbolizes a big, order coming into the market. You see what I'm saying? Like a big purchase. So you
Mm-hmm.
see how this kind of just opened up and slipped down.
Yeah.
Let me zoom it in. You see how it just engulfed this counter to the left.
Yes.
So this was just all sales, no buys. So the candlestick to the right should offer some kind of, saying buyers into this you see this little highlighted blue area.
Mm-hmm.
So, price should be offered fairly on both sides, meaning, you know, price should be offered, they should, each candlestick need to get traded into fairly. Like you see how just, buyers have been offered, sellers have been offered into this candlestick. So you see how it's going up and down, back and
Mm-hmm.
forth. That's efficient delivery. So this whole area right here is efficient. But right here, it just opened, slipped down, and it closed. So the candlestick to the right, they should offer some kind of buyers into this red candlestick. You see what I'm saying?
Yeah. Because that's just money sitting there.
Yeah. So this was just a big purchase, just all sales. Only one side of the market has been offered. So the candle on this one candlestick. So the candlestick to the right, this was just all sales, no buys, and it closed.
Hmm.
So the candlestick to the right, it should offer some kind of buyers
Right.
into this candlestick. You see how I'm doing a little weak?
Yeah.
It's supposed to, what I'm saying, wick up like that to make it efficient, to make it, what I'm saying, efficient on both sides. But it didn't do that. You see what I'm saying? See how it didn't do that? So this area is still open. So eventually it's gonna fill in this gap. You see what I'm saying?
Mm-hmm.
So it's like saying gaps gotta get filled in the future. It's like wind though. So you see how it tapped into it right here?
Yeah.
Yeah, it's clean. So it's like saying buyers have been offered right here in this little gap area. It doesn't necessarily have to fill it all the way in, but long as they offer some kind of buyers in there, it'll be, fair delivery on both sides. All right. So you see this one right here, how it slipped down. That was a big order came into the market. That was probably like $1 million to the downside, and then it just all sales, no buys, and it closed. So the candlestick to the right. Let me zoom in a little bit. So you see this candlestick right here to the right.
Yes.
It's supposed to offer some kind of buyers into this whole, gap candlestick right here. It has to. This was just all sales, no buys. So, we call that a gap or imbalance in price action. So it has to offer some kind of buyers to fill this area in. You see how I just did there? It stopped like right there.
Mm-hmm.
So this gap area is still open. So you want to put your box. So the area is still open. So I'm gonna stop like right here. So eventually in the future, it's gonna, try to fill in this gap.
Hmm.
And you see how it's buying back up,
Yeah.
slowly filling, offering buyers. I mean, yeah, offering buyers into that gap.
Yeah.
So every time it, see how it's wicking, filling it in, wicking, filling it in,
Yeah. Hmm.
but it left this area still open. But it did trade into it, but it didn't fill majority of that candlestick in with buyers coming into the market. Let's see that if it can get that high. See how it's coming up, filling in the
Yeah.
inefficiency area.
Hmm.
So that's what we consider a gap. Gaps got to get filled in the future is like wind though. You see what I'm saying? And then
Yeah.
boom, look at it. It filled it all the way
Mm-hmm.
into, what I'm saying? You got to look left to get right. Fill this whole gap area in. So it's like saying sellers have been offered and buyers have been offered in this whole blue area or on this one whole. You see what I'm saying?
Yeah.
on this one whole candlestick. Sellers have been offered, and buyers have been offered all the way in the future to the right on this one whole candlestick. So that's efficient market delivery. All right, so you see another one. You see this one right here.
Mm-hmm.
A big purchase came in the market. This was all buys, no sales, and then it closed. So the candlestick to the right, it should offer some kind of sellers until this one candlestick to the left. You see that?
Yeah.
No sellers were offered in this blue area. You see what I'm saying? Because it didn't wick down into it. You see what I'm saying?
Mhm. Yeah,
So
there's
this
no
area is
wick.
still
Yeah.
open. Yeah. And if you have questions, you can ask them. You can
Okay.
ask 1,000 questions. So eventually in the future, you know, like depending on what price, is currently at, gaps can be take profit areas depending on what price is at. You see what I'm saying? So
Yeah.
you can mark your gap areas up, you know, just to target it in the future to see if price come back down to it. Eventually, it's gonna come back down to this area to fill it in, because the algorithm don't like inefficient inefficient price areas, these big gaps that's in the market. So, do you understand the gaps, or you still want
Yes,
me to?
I do. Actually, you've explained that clear. I've never heard it explained like that. It makes sense.
And I can just show
It
you a
makes
bunch of, like, let me do it like this. All right, see this right here. Wait a minute, can I zoom it in? Let me just do it like this. You see this right here?
Yeah,
What is that?
it's a fair value gap. It's a gap in price. I see that
That's
they sold.
okay.
They
Mm-hmm.
sold, and then it went up a little bit to where it wicked, but then it kept going down, so it didn't even feel that remainder
Yep.
of price of cells. And so,
So depending, yep. So depending on what price currently is, eventually gonna come fill in that gap. All
mm-hmm.
right. So uh,
Wow.
we're gonna talk about, what I'm saying, liquidity too. So say for example, you see this high right here.
Yeah.
You know what sits above highs or lows?
What sits above
Mm-hmm.
highs and lows?
Yeah. Mm-hmm.
Is that liquidity?
Yep. Liquidity. You know what liquidity is?
Very vaguely.
All right. So liquidity, all liquidity is just money.
Hmm.
You see what I'm saying? It's or protective stop losses. So say for example, you try to go long right here. You see this? So say for example, let me do it like this. You have bought right here. You expecting price to go higher. Where would you put your protective stop loss
My stop
if you were
loss.
buying?
I was buying. I probably would have put my stop loss a little bit under, like a tick or two underneath that red candle to the left.
Right here?
Give or take with some cushion. Yeah,
And
about a
to my
couple
left?
ticks.
Or right
Yeah.
here?
Oh,
Okay.
yeah.
You'll put it like right here?
Yeah, because I don't want too large of a stop loss.
Okay. Let me show you this. So you see this whole little red little area? So you see it about right here.
Yes, sir.
So it's like saying it's a bunch of, you wasn't the only person that did that, that had that same idea.
Hmm.
Everybody else in the world stop loss. You see my little black line?
Mm-hmm.
Somewhere below this line somewhere. You see what I'm saying? It's just a bunch of protective stop losses below that line. Everybody had everybody got that same idea just like you. They stop loss somewhere down here. That's just a bunch of, liquidity. You see what I'm saying?
Mm-hmm. Hmm.
All right. So check this out. So money sits. So it's like saying money sits below lows or above old highs. Equal highs, equal lows, triple tops, triple bottoms. You see what I'm saying?
Yeah.
So like this right here. See this low right here.
Yeah.
See this high right here. So it's like saying stop losses sit below these lows, protective stop losses sit above these highs. So price is constantly seeking for liquidity out the gate every day. It's seeking for people's stop losses. You see what I'm saying?
Yes.
So
Hmm.
that's how prices is driven to these areas, to our stop losses. Big money is driving price to our stop losses. So if you are buying and you want to take profit right here, you got to look left to get right. We predict in the future. We trade in futures. So it's like saying, let me do it like this, just to train you. Like, see this little dollar sign?
Yeah.
Money sits above highs and below lows. All right. So you're gonna hear me say like discount and premium.
Okay.
So say for example, price was at a discount where you had bought down right here. Price was at a low. You see what I'm saying?
Yeah.
So a discount meaning like if price is at a discount, you want to look for a buy setup on a smaller time frame because we expecting higher prices. So it's like saying if fuel is if fuel is 25 cents to the gallon at a discount price, you'll fill your whole car up with fuel, wouldn't it?
Absolutely.
Or would you be willing to pay $10,000 to the gallon to fill your tank up at a premium
Not
price?
25 cent is a discount
You
every
yep.
time.
You don't want to pay 10 grand to fill up your tank.
I don't want to pay the
Right.
$3-4 we got to pay now. No.
So you got to look at price action in that way. You see what I'm saying?
Yes.
That's the saying. They be like buy low, sell high.
Okay,
So
that makes sense. Okay.
so
Well,
say for example, prices drop down to a discount. You got your entry, your stop loss below the low. You got to look left to get right. Where the money at? You're gonna hear me say that a lot. Where the money at? So it's like
mm,
saying, where is people's stop losses sitting at? That's where price is going to go.
okay.
So if price is at a discount and you buying right here, you want to take your profit at a premium high. You see what I'm saying?
Mm-hmm.
But this is for example. We don't get our entries on the 1 hour. I'm just trying to just show
Oh,
you
okay.
what we're gonna be talking about. So you bought right here. You want to target an old high. If price is at a discount, it's gonna go back up to a higher premium, meaning the old high. You see what I'm saying?
Yeah. Because it's trying to sweep all of that stop loss above it. Correct?
Mm-hmm.
Yes.
Yep. So you got to look at it like this: big money, they looking to wipe the board, meaning they selling at an old high. Big money sold at this premium high. They took price down to a cheaper price, to a discount. Now they taking profit on their sales at this discount low.
Mm.
You see what I'm saying? They sold
Mm-hmm.
high, and so fuel was like $10,000 to the gallon, and everybody is what I'm saying, chasing premium sales up here. or buying at a premium. Now they trap money at this premium high. But big money is taking profit at they selling high and they taking profit at an old low on their sales. Now they getting ready to, flip the switch. Now they getting ready to accumulate enough, buy orders just to take price back up to a higher premium.
Hmm.
You see what I'm saying? So it's like
Yeah.
saying they getting ready to they getting ready to fill their tank up for like 25 cents to the gallon at a discount
Mhm.
price.
After selling it for
Now they
10
getting ready
bucks.
to,
Yeah.
yeah, they finna sell, yeah, they bought low. Now they finna take it up, you know, take price up higher to a higher premium until they get up to,
Mm.
$10,000 to the gallon. Then they're gonna take their profit and then they're gonna dump it again. So it's like it's going back and forth. You see what I'm saying?
Yeah.
So you see your entry right here. You could have took your profit right here at this old high. You could have got out. All right. So prices at a discount down here. Where did it go to? You see where it went to? It went to a higher
Mm.
premium, meaning like it's higher. It's higher than where you got in at, or
Yeah.
this low. So when price get to a premium, eventually it's gonna go back down to a discount again. You see what I'm saying?
Yes.
So all we doing is following big money.
Okay.
They buying low. They finna sell at the old high.
Yeah.
When price get to an old high, now they're gonna take it back down to a cheaper price. Now fuel probably like 15 cents to the gallon. You see what I'm saying?
Yeah.
That's how they looking at price and that way. You see what I'm saying?
Yes. Okay. Let's see. Mm.
So say for example, I ain't trying to go too fast with you. So say for example you sold or hit this premium high. Where would you put your protective stop loss?
My stop loss, I would put it a little bit above that black line of the high. Yeah, so where it is right there. Um Now my take profit.
Yeah.
Uh I would like to do either, I mean, a 1-to-1 is nice for take profit, but a 2-to-1 take profit
Where would you
is
take your
nice as
profit at?
well.
Okay. Oh, so you said your stop loss would be somewhere above the line,
Yeah,
and where
just
you
a
say
little
your
bit
take
of
profit to be?
yeah, just a little bit of
Well, right here.
yeah. Yeah.
Right here.
Uh
You want your stop loss right here?
no, I would put my
I mean your take
take
profit.
profit at 2-to-1. No, I would put my take profit at 2-to-1.
Oh, 2 to 1. Okay.
Yeah.
Right here. Okay.
Yes, sir.
So you remember I was saying premium and discount.
Mhm. Yes, sir.
So when price is at a discount,
Mhm.
eventually it's gonna go up to a higher premium. All right. So you see how we was at a discount and price went up to a higher premium. Let me do it like this. When price get to a premium, eventually it's gonna drop down to a cheaper price. You see what I'm saying?
Yes.
So it's like saying fuel right now is $10,000 to the gallon. Now everybody else in the world, you know, what they gonna do with that information? Are they willing to buy that fuel at that price, or would you? Well, you will get it for 25 cents, right?
Mhm. Mhm.
All right. So you looking to sell? Everybody else trying to chase buys at a premium high. We looking to take price down to a discount price, to a cheaper price, because that's what big money finna get. That's what they getting ready to do, because they bought low. They sniping entry down here. Now they getting ready to take profit on their buys up here at a premium high. And now when price get expensive, now they getting ready to dump price down to a cheaper price again to repeat this whole cycle.
Mm.
And you got to remember,
Mm.
it's like our previous entry, where them stop losses at, are now our targets now in the future. You see what I'm saying?
Oh, so I would put
Because
my
big money.
sorry, I would put my
Oh,
take
go ahead.
profit lower because those that stop loss is that liquidity.
Mm-hmm. Yeah.
Oh, oh,
You want to target these people's stop losses.
oh.
Crazy, huh?
Yeah. Wow. Okay.
But you don't have to aim that far. All you need is a 2 to 1,
I'm
2 to 1
not
risk to reward.
greedy, but I would love to take that
That's
stop
good
loss
enough.
all the way to the bank.
And then look at it, boom! You see how it just shot right through their stop
Wow.
losses? Well, you got
Yeah.
in there. So it's like saying you better take your profit on these buys at this discount low, and you better. I mean, I said they're wrong. When you are buying, you better take your profit when it get to a higher premium. Because guess what? When price get to a premium, eventually it's gonna come back down to your entry. You see what I'm saying? In the future.
Yeah.
So you can't be just holding all day. You gotta have a target.
Mm-hmm.
You see what I'm saying? You gotta,
Yes.
look left to get right. Where the money at? If you bought down here and price hit this high, take your profit. Because we don't have that much capital to be, what I'm saying, just holding trades. You have to have a target. You got to know when to get out. You can have a sniper entry and don't know where to get out at, and then price, look at it, come back to your entry when it get to a premium. You see what I'm saying?
Mm-hmm.
You got to know where to take your profit. That's important, and it's all about knowing where you at on the chart at all times. That's key. They don't teach you that.
No, they
So you see
don't.
how it just flushed all the way down,
Yes.
and it just grabbed all these stop loss.
Wow.
So say for example, I bought right here, and I didn't take no profit because I wanted to make $10,000 on this one trade, and I'm up like 5 grand up here, and then I didn't even trail it, and I let price come all the way back down to my entry. I'm sick. You see what I'm saying?
Yeah.
That's why 90% of traders lose because they don't know, they don't have no sense of direction, or they don't know where to take their profit at. They get good entries, but they don't know where to get out at. That's key.
Wow.
Because you can't hold no trade like that. Because big money, you know who we going up against? Big money,
Hmm.
institutions like big players, Warren Buffett, and all these cats like that. They move price. You know what I'm saying? We
Yeah.
can't move price like that. So you see how it just flushed all the way down like this? We can't
Yep.
move price like this. That's a lot of volume to the downside. That's a big player. We are this us right here. This one little candlestick right here.
Yeah.
You
Hmm.
see what I'm saying? We are consolidation. We can't move price like that. So we trying to align ourselves with big money because they the ones who move price, and they looking at price in this way. They buying low, they selling at an old high, they taking profit at a discount, and vice versa. They wiping the board. You see what I'm saying? They wiping the
Hmm.
board, and they just trading to our stop loss. You see what I'm saying?
Wow. Yeah.
And you see how when price is just right here, and then it sold off again. What did it leave? You see these two black areas from this
Yeah.
week to this week. What do we call this little area?
A
It's
gap.
just all sales, no what?
Sales, no
Yeah,
buy.
all sales, no buys. Yeah. So the candlestick to the right, they should offer some kind of buyers into this gap to make it efficient, but it didn't. It stopped like halfway. It did tap into it, but like right here. See how it just wick into it like that.
Yeah.
So eventually in the future, if price is at a discount, this can be your take profit area. These open little gaps or a old high. You see what I'm saying? Cause so it's like saying who in profit right now? Sellers. The sellers in profit right now because you see this drop.
Mhm.
Sellers in profit. So all these cats right here that's selling, they better take their profits because guess what? Price eventually gonna come back where?
Yeah, it's gonna come try to fill up that those gaps where
It's gonna fill in that gap.
hmm
And then what's this about this?
it's gonna
What's this
sell
above this?
tap into that liquidity. Yeah, because it's still up there.
Hmm.
The stop loss is up there. Yeah.
Mm-hmm. Yep. But these cats in profit. Yep. They in profit on their sales. So you gotta take that. You better take it. If you snipe it up here with big money, you better take your profit because eventually it's gonna come back up to your entry. You see what I'm saying?
Mm-hmm.
Did it fill in that gap?
Yep, it did.
Yeah.
Yep.
Fill it in. So we can take that off. The area is efficient now. Purchase at a it dropped down to a discount. Eventually it's gonna go to a higher premium. It's like when though? Who in profit? Sellers. Sellers right here on his leg down.
Mm-hmm.
Where did price go back to?
It went back to
Went
above.
above the entry then.
Yeah. Wow.
Went back to their entry and stopped them out. So
Hmm.
now they chasing. They like, damn, you should have took my profit. I was up 2,000. I'm greedy. And they beating themselves. You know what I'm saying? People be, really doing that. You see what I'm saying? So that's all I be doing. I'm trying to align myself with big money. But you gotta know how to read the price action though. And it's all about knowing where you at on the chart. You see what I'm saying? Prices, that's why it's going up and down. It's seeking for liquidity. You see what I'm saying?
Yes. I
What is
do.
this right here?
That's a gap. That's a buyers.
What's
Nothing
that?
but buys, no sells. Hmm.
Did it get filled in?
Yeah. Yep. Wow.
Just train your eye because that's all we're looking for. We ain't doing that. I'm not doing nothing too crazy. I'm just using discount and premium to help guide me on what button I should look to press. I'm buying low and selling high. That's it. And I'm targeting people's stop losses. That's it.
That's
That's it.
amazing.
What's this below this low?
People stop losses, liquidity.
All right. What's this above this little week right here?
People stop losses at the top, liquidity. Hmm.
You see how this one counter just pushed up,
Mm-hmm.
grabbing those stops and then reversed.
Yes.
Crazy, huh?
Yes, it is.
So it was like, price was like fuel was like 25 cents to the gallon down here. But when it got to a premium price up here, when it manipulated this little high, grabbed these people's stop losses, it tanked,
Yep.
taking out all the buy. Who was in profit? Buyers right here. Let me put a
Mm-hmm.
little scoop right there. Yeah, buyers were in profit right here on their buys. They stop loss somewhere down there. They, oh yeah, I'm finna make 20K on this trade. You see what I'm saying? Not
Wow.
knowing who they going up against in the market. Big money, the ones who will price. So if you catch this whole, this all you need. You see what I'm saying? That's a
Mm-hmm.
1 to 3 or 1 to 4. We're around the day. You don't even need all this. You just need a 2 to 1. As soon as that smack just be done, hit your goal and be done for the day.
Yep. Wow.
Everybody just want that home run trade. You know what I'm saying? And you know who we going up against. People that got way more capital than us, and they manipulating price.
Yeah, exactly.
They
They're the
manipulating.
ones determining where the price goes. We're just trying to follow them, just trying to make sure we get in where we fit in. Yeah, interesting. I've never thought about it like that.
Mhm. That's all we're doing. That's who we going up against. So it's like saying I'm just trying just showing you like what's going on behind the scenes. Big money bought down here, but really they bought down at the bottom of this week.
Hmm.
Let me zoom it in some more. Big money gonna always get the best entry. They trade on the seconds. The second charts.
Yeah, those are
So
too
they entry
intense for
probably at the
me.
bottom of the field. You say that what happened?
They're too intense for me.
Oh, okay. So they always gonna get the best entry. They don't be in drawdown. You see what I'm saying?
Mm,
But you see all this movement to the upside.
yes.
That's you can tell big money got behind the move. Just like look how it just pushing. We can't
Yep.
move price like that. So
Hmm.
when it was at fuel was 25 cents to the gallon, it went up to a higher premium. Now big money they getting ready to they taking profit at the they bought low. They taking profit on their buys up here at a premium high. So now they getting ready to sell. They probably sold right here. They always gonna get the best entry. And you see how they bought low, they took profit on their buys up here, and you see how price just rejected and started selling off and going sideways.
Yes.
Now they getting ready to accumulate. You know what accumulation is? Or
Um,
consolidation?
Kinda. It's kind of like they're trying to get ready to. I've heard about the AMD, accumulation, manipulation, and distribution. I've heard of
Hmm.
that, but it's like they're waiting to see um, which side they can manipulate the market to.
Yep. So if price is at a premium right now, they getting ready to, you know, accumulate enough orders like buyers at this premium high
Mm-hmm.
because big money getting ready. They already took profit on their buys. Now they
Right.
getting ready to dump their shares. You see what I'm saying?
Oh, that's so clear. Yes.
So so this is how price really moves. You see what I'm saying? This ain't no this the story behind the scenes that people that don't understand. So they yeah, big money's buying low. They taking profit at an old high. When price get to an old high, now they getting ready to they take accumulate enough orders to get ready to dump price down back
People
to a
try to
cheaper
make this
price.
seem so complicated, and it's not. The way you're making this so easy for me to understand is incredible.
Yeah. That's why I was like, it's all about who you learn from. It's a lot of BS, like as far as information out there.
Yeah, like they try to make it seem so complicated. No, it's clear. Wow.
Mhm. And you see, I only got like just a couple lines and just showing you what I'm looking at. But it's
Yes,
nothing
sir.
too crazy. You can clean, naked chart. You see what I'm saying? They just wiping the board. They buying low, taking profit at old high. Now they're getting ready to accumulate enough orders just to sell it back down to a cheaper price to take these people who trying to follow them. You see what I'm saying?
Hmm.
So if you following them on their buy with them on these buys, you better take your profit when they get up here.
Hmm.
Because
Wow.
eventually they play both sides. They buying and selling.
Hmm.
They gotta make the market. They have to. Because they can't trade like how me and you trade. We can just press buy and sell. Uh-uh. They gotta make the market. They gotta accumulate enough orders at this discount price. They trying to get as many people as they can to sell at a discount price. Once they absorb all them orders down here,
Yeah.
then it's gonna just rip up out of the. They got to get as many people as they can on the wrong side of their trade, and then it's just gonna rip up. Same thing. When price get to a premium, they got to get as many people as they can on the wrong side of their trade. Meaning, like they got to get as many people buying. You see this little blue candle? I mean, this little blue box I put up here.
Yes.
As price was going sideways right here, they enticing people to buy. They enticing you to buy. They trying to get as many people as they can to buy at this premium high, and then they gonna press sale and dump it down to a cheaper price. So it's like they faking you out. You see what I'm
Yeah.
saying?
Uh-huh.
That's how they make the market. Same thing right here. When it was pushing down like that, they trying to even though prices at a discount. So say for example, you woke up late and you missed this sale up here at this little premium high. and you saw it down here, and you like, damn, I missed it. Would you sell right here at a discount?
Yeah, potentially try to get in on that,
Okay. Well,
but
guess
it
what
wouldn't.
though? Everybody that's on the real deal too.
Yeah.
You, but you see what price it sold off to though. You say you'll still sell right here just because you see it's red.
Mm-hmm.
You always got to remember, it's all about knowing where you at. Prices at a discount right now. Why would you sell right here? You got to sell at a. If you missed it,
At a
you
premium.
know, look for the next. Yeah, it's at a
Oh,
premium. Always sell. You got to sell high, and you want to be looking. You want to be looking to buy at a.
yeah. So I
Buy
would be
low.
buying at the discount and trying to sell at the premium. Got it. Got it. Got it.
Hmm. So that's what everybody else in the world did. They chased this move. They're like, damn, I knew it was gonna go down, and they sell them at a discount. And big money wants you to sell at a discount
Mm,
in order to take price higher. You see what I'm saying?
yeah.
And it just ripped up. Now you trap money, and this one candle, it just gone. You in hella drawdown, and people don't trade without no stop loss or with a stop loss. So they risk their whole account. Now it's gone. You see what I'm saying?
Yep.
That's how you got to look at price in this way. They got to make the market. They got to sell in order to buy. Meaning they got to get you to sell in order for them to buy,
Hmm.
and vice versa. When price get to a premium, they trying to get you to buy so they can get ready to sell it back. They trying to. It's just a pump fake. You see what I'm
Hmm.
saying?
Yeah.
They wiping the board. That's how they do it. It's the game they play, and they do this every day. They do this every day. So buy. So it's like saying buy down here on a smaller time frame. If price is at a discount, take your profit at an old high to the left. When price get to a premium, take your profit at these old lows. If price is at a premium, you want to take profit at a discount, meaning like an old low. You see what I'm saying? See
Hmm.
this little wick.
Yeah.
Target these people stop losses. See how price just bounced up here? It
Yep.
bounced. It bounced. It bounced. When price get expensive, target these people stop losses. See what I'm saying? That's
Mm.
where price gonna go. And you see how it just shot right through it.
Yep. Wow.
They wiped out all these buyers over here. So who in profit right now?
The
Who in
sellers.
profit right now? The sellers. Where they stop losses at?
Their stop losses are above, but their take profit is swiping all of that stop loss.
Hmm. So it's like saying, yep, whoever sold up here trying to follow big money, and they getting greedy and they didn't take no profit on this leg. If eventually it's gonna come back to a higher premium, because that's how the algorithm is coded. It's going from being at a discount price, it's gonna eventually go to a premium price, and when price get to a premium, it's going back down to a cheaper price, and vice versa. When price get back down to a discount, it's gonna go back up to a higher what?
Wow, higher premium. Look at that. Enough to sweep that
Crazy, huh?
liquidity. Wow.
So it's like saying all these people that's selling right here on this leg down, they
Yeah.
gotta take their profit. I'm trying to tell you. And look at it. If they didn't price it back at their entry, and it stopped them out in the future. You see what I'm saying? So this is how
Mhm.
price really moves. What is this right here?
It's a gap. Buys. No sells.
So it's like, because it's candlestick to the right. It didn't wick down into it. No sellers were offered on that candle. So that's a take profit area. If prices when prices get to a higher premium, eventually it's gonna come back down and fill in this gap. It's like wind though. You see what I'm saying?
Yeah.
Let's see if we get down there. And then what is this right here?
Hmm.
When price got up, it went to a wood. Where we came from.
Oh, from that low, that sell, all the way up to that high of buys. It went down to that stop loss, the previous stop loss.
Mm-hmm. Yep. What do
It
we
swept
consider this
all of
though?
that. I'm
What did
sorry.
it drop down to though? Where did price drop down to?
Um,
This where we came from. What did it
mhm.
drop down to?
It dropped
What do we
down.
call that?
Uh, I don't know. Sorry.
So
Um,
all right. So
what would we
if
call that?
price is at a premium up here, it dropped down to a what? What's the opposite of premium?
Oh, a discount. Sorry, a discount.
You see what I'm saying?
Yeah, it dropped all the
Drop
way
down
from
to a
the premium
discount.
to the
It
discount,
went up to a higher word.
and then they shot it up to be able to
Yep.
make it into the premium. Wow,
Mm-hmm. What is this right here?
that's a gap in buys. Nobody. It's just sellers, no buys.
Mm-hmm.
Mm-hmm.
And then you see how it just weaked into it.
Mm-hmm.
So it's going back and forth. And then look at that. Let me do it like this. Did it fill in our gap? Or did it tap into it?
Oh,
Did it?
this
Hmm? Did it
that
fill?
price, yeah, it filled into it. It gapped into it. It tapped into it with those wicks.
Why is that tripping? Let's see. There we go. See how it filled it in?
Yeah.
To the T, huh?
Wow. Yeah, it did fill it
So
in.
this yeah, so yeah. This are you understand? You got some courses now. I know you got some courses.
Yeah, I do because I see how it it took out that yes, that gap right here. And then it filled it in on the right to the point where it literally filled all of that in because they had to take that discount back, that liquidity back, from making it into a premium. Wow. Okay. Um, now,
And it's just oh go ahead.
no, you go ahead because I'm here to learn. This is crazy.
Oh
I
no, extra questions. What you was
Now I
about to
see
say?
that they were able to turn it into a discount down here, and then they ended up making it into the premium at the top to sweep that liquidity at the top, from the previous
Mm-hmm.
premium that they had. Um, yes, so they were able to sweep all of that liquidity up there, and then they were able to um, generate it into generating, like you said, the acclamation. They're generating enough um, buyers in order to be able to dump all of that price again. Um, when it comes to making an entry into these types of um, positions, Uh, how would you say that you were able to find the correct confirmation to enter into? Like, let's say from that previous discount to making it all the way into that premium, where would you enter if you were to take this trade?
Yeah, I'm gonna show you that. But you want
Okay.
to enter on the smaller time frame, like the 1 minute. Yeah, I get my trades on the one
Oh, we're
minute and
still on
on
the one
down.
hour. Okay, I apologize.
Yeah, this is
Yes.
the one.
Okay.
I was just trying to like show you the language on how they doing it.
No, you've broken it down very clearly to me. Like I understand it a lot more now than I ever could have explained it myself. It makes sense that they're basically making the market. They're making the discount for themselves so they can buy at a low up until they make it up to a premium price, and then once they get more people to try to generate that same amount of action, then they pump the mark, they dump
Mhm.
it in order to gain that money back that they had to make in order to make it to the premium. Oh, that's wow. Okay.
That just blew your mind, huh?
It did because I didn't understand the market. I didn't understand the order flow. I could never understand how they were able to make those highs and those lows, but you've literally broken it down to me, giving me a glimpse behind the scenes to see what it is. And how they're able to make those moves the way that they do, especially with the liquidity at the top. I didn't understand that. Wow. Okay. That's amazing.
Yeah. All right.
Thank
Crazy,
you for
huh?
breaking that down for me
Crazy.
because it was so complicated. It felt complicated and intimidating to try to learn all of these different ways to read the market. You've made it so simple. Well, not so
Oh yeah.
simple, but you have made it to where it's palatable. Thank you. Wow.
Oh, no problem. You know, it's all about who you learn from.
That's
You see, I don't got
crazy.
nothing too crazy on my chart. Just a couple lines and arrows and stuff, and a box. But
Yes, but
yeah, this
even
is this
in
is really
oh, I'm
what you
sorry.
say.
Continue.
Oh, go ahead. What you about to say?
Well, I was just going to say, even in the midst of you showing the boxes and the lines, you're demonstrating exactly where my eye needs to be trained to look. I need to be looking above the price and below the stop losses. I need to train my eye to look that way because that's where the money is, as opposed to looking for the next candle, I guess, is what I was trying to do when I should have been just looking for the next area of liquidity. Wow.
Hmm. So this is the language. Price tells a story. It's your job to figure out what is big money trying to do. What are they saying? And they going up premium and discount. They selling
Mhm.
high. They buying low. They trying to get as many people as they can on the wrong side of the move, and then it's gonna reverse. You see what I'm saying? They playing
Mhm.
ping pong. They taking everybody money. They greedy. It's,
Literally.
so this the game they playing. Oh, so say for example, you remember we were saying prices at a premium. You could
Yes.
take your profit at a gap.
Yes.
You don't even have to feel it all the way in. As long as it touch you, you good. You see what I'm
Okay.
saying?
Wow.
It don't. You can hit your 2 to 1. That's your 2 to 1, and it just touched it. Boom. Now you out. Because what if it don't fill in the gap all the way? You see what I'm saying?
Yeah.
And it just reverse and buy all the way up halfway, and you still holding, and it come back to your entry. You see what I'm saying? You
Mhm.
got to know where to take your profit at. Don't get too greedy, because you know who we going up against, and you see how they playing ping pong, up and down, up and
Literally
down.
manipulating the market. That's crazy.
Hmm. And you
Wow.
see these highs right here, and you see how it did this. It was accumulating, filling the gap.
Mhm.
It had bought all the way up, grabbed these. Who was in profit? These sellers,
Yep.
these sellers.
These
It just
sellers.
reached up, grabbed all this to the
Hmm.
left, taking all the sellers out who didn't take
Yep.
no profit on it. Touched the gap right here. They didn't take no profit. They want to see price go to zero. They want to make 100,000. You see what I'm saying? And you know who we going up against. Price bought up, take y'all greedy folks out, and it just dumped back down to a cheaper price. Taking out all the who's in profit down here.
The buyers. They took all of that
Did they
stop loss. Wow.
They wiping the board. You see that, huh? They
Yep.
all right, sellers in profit. All right, we see y'all buyers in profit too. All right, let's take these people out first, these
Yep.
sellers out first, and then we gonna sell
Wow.
again up here. And you see how aggressive that push down,
Hmm. Yes.
taking out wiping the board. Let's stop these sellers out. Now let's start the buyers out. Boom. Now they satisfied. Now they gonna do it again. They do this all day, every day. accumulated. All right. So you see where we at? It dropped down to a what?
to a discount. Um, yeah, they dropped it
What
all
do
the
we
way
see?
down to that discount down there.
I'm gonna show you the interest and all that. What is this right here?
It's a gap. It's a big gap.
So what does the gap symbolize?
The gap symbolizes the buyer or the sellers. Sorry, the sellers
Mm-hmm.
um,
Yep.
putting their money in there, and it's not being. It's just open. It's just untapped potential.
Mm-hmm. It's just a big purchase coming into the market.
Wow.
A big purchase. So when price get down to a discount, this can be a TP. Take some profit on this gap field. See how prices went sideways down here,
Mm-hmm. Yes.
and this one candle just pushed down below that little wick right there. See this little wick right here. See
Yes.
how this kind of pushed down, then this one opened up, reached down, grabbing these. What's this below these?
That's their
So you see
stop
how
loss.
prices bounced
Yeah.
up. Mm-hmm.
Wow.
Stopping people out. You
Mm-hmm.
said prices at a discount.
Wow.
Big money gonna get the best entry. They bought down here on the bottom of that week,
And they
and
bought
they're
it
gonna
at a
target the gap
discount,
field.
a serious discount.
Hmm.
Wow.
So it's like saying they bought. So it's like saying they bought their fuel for like 5 cents. And when price get down to a discount, we want to see price go to a higher premium. You see what I'm saying?
Yeah.
Let's see what happened. Ooh, okay. It dropped down to a deeper wood.
Hmm.
You see that? What
Yes.
did it go down to?
It went down to an
See what we
even
got in?
deeper discount. Yeah.
So when price drop down to a deeper discount, what are you doing? What do we want to see happen?
Well, for us, I mean, I guess we would want to be able to buy at a low and then sell at a premium. So we'd probably like to get in at the lowest price possible. But if they're pumping it, that means they took all that liquidity that was to the left.
Okay, okay. So say for example we lost this trade right here
Hmm.
because we got greedy and we didn't want to take no profit. You know, if it doesn't come to your you want say you wanted the whole gap field and it came halfway and you ain't taking no profit and you let it reverse on you like that, it just want to drop down to a deeper discount. Okay, so just accept that loss. It's a part of the game. You know what I'm saying? But if it's dropping, if price was at a discount right here, and we got a little bounce, and then it just straight to stop loss and you lose, okay, don't beat yourself up. It just dropped down to a deeper discount. We still looking for buys. You see what I'm saying? It's just
Yeah.
giving us another opportunity. That's how you got to look at that.
Okay.
And then
Okay. I
what is
can't
this?
get discouraged about it. Okay.
Yeah, it just wasn't price wasn't ready to move yet. You see what I'm saying? It
Yeah.
wasn't ready to move right then and now. Sometimes that'll happen. You'll be up and then straight to stop loss. But remember, I was saying it's all about knowing where you at on the chart.
Yes.
If you know where you at, you still know where to attack. If price is at a discount right here, and we was targeting the gap fill and we lose, and it dropped down to a deeper discount, it's gonna give you another opportunity. You just gotta wait for it. And then what is this right here?
That's a gap, seller's gap.
Mm-hmm. So what's this about these highs up here?
So all of that is liquidity because that's their stop losses.
And then, and we still got this gap up. So all of
Yep.
these are targets in the future. So you
Mm.
can mark all this up. and just wait. That can be, what I'm saying, to help build up your bias of what price, depending on where it should target. Target these people stop losses. Target they stop losses. Target the gap field. But you don't need all that. You just need a one or two. Let's see, can price get back up there? And then look at it. Filled in the gap. Price
Yep.
drop down to a deeper discount. Big money gonna get the best entry down here.
Hmm.
Let's see, can price get up there? Look left to get right. Look left. Look left to get right. We are predicting the future. Where the money is. That's what you gotta ask yourself. Where the money is.
So the tops of the wicks, that's basically liquidity just sitting
Mm-hmm.
there at the top.
Protect the stop losses.
At the
So you
top and
see how,
bottom of every wick. That makes so much sense.
yeah,
Wow.
yeah, So you see how price, for this area right here, like it, like it bounced down, really bounced down. You see what I'm saying?
Hmm.
All these bounces, if you were selling like for yourself, you'll put your stop loss above that high, or this one up here too. So that's where the money's at. You see what I'm
Mm,
saying?
yeah.
Depending on what price you at. And then you want to target their stop loss because big money finna wipe the board. They big money getting ready to buy low, and they gonna take their profit at an old high. You see what I'm
Mm,
saying?
yeah.
That's where you want to take your profit at, depending on what price it. If it's at a discount price, discount market, take your profit at an old high or a gap, or target a gap where the money is. That's what you got to ask yourself every day. Where the money is? Where's price currently at? And use discount and premium to help guide you on what button to press. You see what I'm saying?
Yes, I do. Wow. Okay. That this is this is very, very helpful in helping my sense of direction because I told you I didn't know where I was what I was looking at. I didn't know what I was looking for. You've helped me so far. I'm starting to grasp the concept of, you know, how this actually works. Wow.
Yeah, yeah. This the game they playing. This how they do it. So you see how we see the what the arrow at this discount.
Mhm.
We lost this trade right here. Okay, it gave us another opportunity down here. Oh snap! I'm trying to get another trade. Oh, let's see. Big money gonna always get the best entry. So say we lost that first trade, it gave us another opportunity, and we target right here.
Yep.
We just need our one or two. Boom, TP hit. You see what I'm saying? So don't
Yeah.
beat yourself if you lose right here. And you was right. It was at a discount. You know, it did go up some, but if you secure some profit, you good. Or we lost. Drop down to a deeper discount. All right, I lost that. Now it's giving me another opportunity to buy that fuel for 10 cents to the gallon, and then price just runs away. Price don't like being at discount prices. You see what I'm saying?
Yeah.
That's how the algorithm. Yeah, it don't like being at cheap prices. It's gonna try its best to run away from this level. You see what I'm saying? And you see how it just running away.
Yep.
Where the money is. And you see how
Wow.
it bought all the way up.
Yep. Taking out
Put it
all
through
of
in the
that
gap.
liquidity from, yeah. Wow, filled in that gap. Wow.
Crazy, huh? Look at that.
Yeah, the gaps are always going to get filled. Wow. Okay.
Hmm.
Hmm.
And you see this gap right here where we was targeting on this first trade,
Mhm.
and it went straight to our stop loss because we got greedy and we didn't take no profit. It
Yeah.
gave us another opportunity to get in down here. Target the same targets you had on this first trade. Well, not really. because this was the target on the trade on his body, the gap field. But it left these highs when it, when it broke down. So that's what we want to target here, here, in the gap field. And then boom, we got all that to the right. Crazy, huh?
Yes. Yes, it
Look at that.
is.
That's the whole gap field right there.
Now, okay, so you see how like when you made that box from the top of that gap, you see how all of those wicks at the top they were touching that box, even that green wick that is also meeting the wicks, the tops of the wicks. So you see how that black line above that wick here for that extra space?
Yeah. What about it?
Yeah, so that gap right there that you filled out with that box, with that blue box,
Yeah.